Hey everyone, welcome back to FiscalVoyage. My name is Felix. In today's video we're going to talk about two videos that I covered before. We're going to go over those two videos and two particular stocks in those videos, and we're going to see how they perform. Because a lot of YouTubers make videos on stocks and this and that, but they don't go back and research and do like what did that video perform, right? They say buy this, buy that, how did they perform when they recommend that suggestions. So we'll go back and look at two particular videos and see how they perform since then. And we're going to cover two undervalued or fairly valued dividend growth stocks that present great buying opportunities in today's overbought market. So if you're new to the channel, make sure to hit that subscribe button and like this video if you enjoyed it, and let's get started. Alright, so let's first go over the two videos that I've done in the past and let's see how they performed. So the first one on March 19th, I did a video on AbbVie. You can see here AbbVie, ticker symbol ABBV. The stock actually dropped that day or a few days prior. They had a gap down, and if we go to Seeking Alpha, you can see here, let me see the past month, this is the day when it dropped, and I made this video on March 19th, so that was over here, March 19th. This is where I made that video. You can see here it was about $103, and right now it's up to $108. It had a big drop from 110 to 103 or $102, so it was a great buying opportunity. I think the company is still fairly valued to slightly undervalued right now. At that point, you had a great 5% yield, and now it's at 4.8%, but that was a great buying opportunity. And then I also made a video here. I sold Apple stock in January 28th. So if we go to Apple, January 28th, over here, the stock was about $140, $143. And you can see here, I sold it at $143.53. And since then, it dropped all the way down to 116. Right now it's back up to 134. So I had the opportunity to buy it at 116. I think it was still overvalued, full extended. If you look at the chart for Apple, but right now it's at 134. So I did have the opportunity to buy more, but it was a good move selling because I took profit and I could have bought more at 116, the 120, 115. In the 115 area, if you look at the chart for Apple in the candlesticks chart for Apple, you can see there's support at around 115, so it needs to pass 115 to go further down. But the next thing I want to look at is two stocks that I find still to be undervalued and is heading in the right direction. Two stocks that I've covered before. The first one is going to be Lockheed Martin. If we go ticker symbol LMT, this stock has been on a downtrend recently, but now, and you can see here, it's all the way since January or February, it's been up. It was at $400. You can see here there's some resistance at $390 to $400, and then it has room back up to $430. So I've been calling eyeball shares around 360 or so, so I'm up pretty nice now. But the company looks to be fairly valued to slightly undervalued. You can see here it's projected to grow around 7-6% in the next few years. Earnings, that's good. Has a dividend of 2.6%. Earnings yield is at 6.4, so that's real good. S&P credit rating A-, investment grade, and a long-term debt to cap of 64%. So overall, I like Lockheed Martin. I personally will wait for a pullback around 380 or 370 if I wanted to add more. But right now, before it explodes, it's a decent buy at today's price. I personally would wait for a pullback, but it is undervalued. I think it's worth 420 to 450 per share. But I would wait for a pullback. But if you're interested in buying Lockheed Martin, right now wouldn't be a bad time to nibble a few shares here and there. The next one I've talked about before is Bristol Myers Squibb. This is another stock that's been kind of flat and lagging the market. And you can see here now it's up to $65. I've been calling this a buy around $60. There's been times it went under $60. You can see here $55, $58, $60 in that range. So it's been great buying opportunities. Right now it's at $66. or $65.46. It has a 3% yield. Earnings yield, you can see, is outstanding at 10.3. A plus credit rating and long-term debt to cap of 54%. You can see here the earnings growth is expected to be huge, 16% for 2021 and 8% for 2022. This company is undervalued. Great buying opportunity right now, 65. Before it hits that $70 mark, then it has room all the way up to $75, $80. And I can see this stock going as far as over $100 for sure in the next year or so. So it's a great buying opportunity, high quality company with a 3% yield and 10.3% earnings yield, which is real great. You like to see earnings yield of 6.5 to 7% or greater. So overall, those are my two stocks. I've covered these stocks before in previous videos. I still like them today. Still great buying opportunity in this hyped, bought market we have in today. But overall, I like those two. As you can see, my past two videos, AbbVie and Apple, were good calls. And I have a lot of videos where I've done, I look back at other videos and see how they perform, my buy recommendation, my sell recommendation, things like that. So guys, make sure to subscribe. I have more videos coming out. Make sure to like this video if you enjoyed it, and I'll see you guys in the next one.